Good morning everyone, this is Amit Pabari, founder and managing director of CR Forex. Wishing all of you a very happy Holi in advance. I have received a lot of calls in a weekend. A lot of exporters have been asking us, their dollar index to flat tha, but why did rupee appreciated almost by a rupee from 80 to 92 to 81.71? Let us understand the reason for the same. There are two reasons for the same. First, Adani group of companies में 15,000 करोड़ का inflows आया था. Second, if you see, Chinese currency has appreciated by more than 1% in last 1 week. Because of these two reasons, rupee has appreciated from 82 92 to 81.72 in NDF. Now the big question is, what next? Now let us understand one of the most important data point. In the month of March, 7 out of last 10 years, rupee has appreciated. The average appreciation is close to 1.67%. The reason of sharp appreciation in all of this 7th year is we received a lot of IT inflows. Because of this, appreciation happened. Now apart from IT inflows, if you see the chart, there are other FDI inflows are also lined up between March to April to the tune of $4.25 billion. This is also going to add pressure on rupee. Now let us discuss the outlook for dollar rupee pair. The major trend of the pair remains on the downside because of three important reasons. March seasonality, inflows expected in the form of FDI, and the third important reason is that we are expecting dollar index to come down towards 102.50 level from 104.50 level. And apart from that, we are also expecting Chinese currency to appreciate towards 6.88 to 6.85 levels. Now, there is a 15 to 30% probability that the pair might take support at 81.50 to 81.70 kind of a level and can move towards 82 to 82.20 kind of a level. This can be act as a selling opportunity for an exporter. But eventually, there is a 70% probability that the pair will break a support of 81.50 and eventually it will move towards 81 kind of a level in coming days. Now let us discuss strategy for thin margin exporters like agri exporter or chemical exporters. We have been advising them that there is a 90 to 95% probability that the currency is going to move towards 82 and 81.50 kind of a level. So they should cover 100% on a back-to-back basis, and market has moved in the same direction. Now there are two cases. First, those exporters who have missed covering at higher level, or there are few exporters who must have taken costing above 81.70 on Friday or Saturday. For them, the strategy is very simple. Keep a strict stop loss of 81.5 kind of a level and wait for a bounce back towards 82 to 82.20. If 81.50 is broken, they should immediately go and cover, because if 81.50 is broken, then we are moving towards 81. Now let us discuss strategy for thick margin exporters like textile exporter or an engineering exporters. Rupee has been trading in a range between 81 to 83 from last 3 months, and our strategy has been very simple for thick margin exporters. Above 80 to 30, you go and increase your hedge ratio, and whenever the pair is trading close to 81.50 or below it, just go and pre-utilize the forward. Exactly the same they have to do right now. They have increased their hedge ratio above 80 to 30 last week. Now when the pair is trading between 81.50 to 82, just pre-utilize the forward. For further cover, they should wait and they should only cover above 82 levels. Now let us discuss strategy for importers. Importers must be really happy to see rupee appreciation. We have been discussing from last couple of weeks that importers should not panic. They should keep a strict stop loss of 83 and 83.30 and wait for better levels of 82 and 81.5 kind of a level. Exactly the same has happened. Now between 81.50 to 81.70 kind of a level, they should cover imports for next 10 to 15 days. Beyond 10 to 15 days, they should wait for some more time, because there is a 70% probability that eventually the pair will break a key support of 81.50 and it will move towards 81 to 80 kind of a level. With this, I will end my today's presentation. जय हिंद, नमस्कार, फिर मिलेंगे नेक्स्ट वीक। थैंक यू।